Hello and welcome to the Weekend Investing Daily Byte. We're shooting this on 7th of July, and the day which many bears were waiting for has finally come. Markets did go into the red, slip a bit. But the thing to note here is that all this has happened on an external trigger. There was nothing triggered within the local markets. In fact, the only headwind that the markets have had is this external environment, the inflation bogey in the Western countries, and the resulting interest rate journey or cycle that is happening, which is impacting us in some different ways. But nevertheless, the fact that the non-farm payroll came out much stronger than expected tells us that the rate hike cycle in the US is not over. And if the rate hike cycle in the US is not over, it is not over in the rest of the world also. Such is the impact of the US market on the rest of the world. Now, having said that, the market, which had broken out above 18,800 odd levels, had raced to 19,500. Let me show you the chart in just a matter of 6 or 7 sessions. So some cool off was due any day. This did not happen in these 2 days. In fact, today also the market made a new high before it succumbed to its own weight, I would say. And some correction now down to 19,200 or maybe even 19,000 is not such a bad idea actually. And this would be, for me at least, buy on dips kind of market, because till we breach the point where we broke out from, I don't think that I would like to consider that the breakout has failed. So the major decision point will happen if the market were to breach this 18,800, 18,900 level. That is where I would start to question this entire rally, whether this has any more legs or not. NIFTY heat map, red all over the place. No place to hide today. Some of the stocks were a bit stretched and those have collapsed, but the ones that have sustained even today show you the kind of strength the market has, the inherent underlying strength. Tata Motors up 2.9%, Mahindra up 1%, Titan up 1.2%, Bharti flat, Cipla flat, Reliance, Coal India, BPC are not giving up much, State Bank, TCS not giving up much. The major losses that happened were in Hindustan Levers, ITC, HDFC Twins, ICICI Bank, Bajaj Finance, Kotak Bank, Bajaj Auto, Asian Paints, L&T, NTPC, Power Grid, some steel and cement stocks. As mentioned, most sectors were down between 0.7 to 1.5%. No surprises there. But the surprise that was there was the PSU banks, which gained 1% today also. So 8.8% now over a month and 8.5% in the last 1 week. I think this movement today of PSU banks is telling you the inherent strength in PSU banking right now. And the autos also remaining in the green today. Mid caps giving up yesterday's gain, in fact less than that, not even able to close between 1 day low. Small cap, no loss at all, I would say, not even near yesterday's low. So really, as of now, there is no concern in terms of where this trend is. In terms of Nifty Bank, yes, Nifty Bank had been struggling last 3 days, and today, the very short-term trend seems to have changed. So maybe this will come down to this breakout level, retest it, and then go back up. That may be a possibility going forward. This is the US government yield, 10-year yield that I'm talking about, this which had broken out, and this is a reasonably long, flag pattern of about 7 to 7.5 months. And if this flag pattern were to play out, then we are looking at least 6% on the yield. And if US yield goes to 6%, the world will have some issues for sure. So this is how the setup is right now. I don't think there is a immediate rush or a hurry to declare a top on the Nifty. I think we have to wait and watch whether to buy Nifty or to wait. I think we are very firmly in an uptrend. Every dip should be considered as a buying opportunity for now, unless we break down below that breakout level, as I mentioned. That will be the first signal to me that this entire leg was or has failed, and we may again go into that that band of you can say uh, sideways range that we had been struggling with before this breakout. So this is very significant that we watch how deep the market cut will go. My own I should not speculate, but my guess is that we are going to see this market go up very, very soon again. That's all I have for today's episode. Thank you so much for watching. Do give us a like or a subscribe if you like the content. Do share this with your friends. Thank you so much. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.